This is one of those moments where you need to stop scrolling and really pay attention, because what is happening around XRP right now is not normal. And if even a small part of this plays out the way some analysts are suggesting, it could completely change how people look at this asset forever. There are whispers turning into serious discussions. There are predictions that sound unbelievable at first. And there are signals in the market that are making even experienced investors pause and rethink everything they thought they knew. The idea of XRP reaching something like $1,000 sounds insane. It sounds unrealistic. And for many people, it sounds impossible. But what if the real story is not about whether it sounds crazy, but whether the conditions for something massive are slowly coming together right in front of us? Right now, the conversation around XRP is shifting in a way that we have not seen in a long time. And it is not just coming from random social media hype, but from deeper discussions about utility, global finance, and the role XRP could play in a changing financial system. When you look at the current price, it feels far away from something like $1,000. And that is exactly why people ignore it, because the gap looks too big to even consider seriously. But history has shown us again and again that markets do not move in straight lines. And when they move fast and they move hard. The first thing you need to understand is that XRP is not being positioned like a typical cryptocurrency anymore. Because while many digital assets focus on hype cycles and speculation, XRP has always been tied to something bigger, which is real world use, especially in cross border payments. This is where things start to get interesting, because the global payments industry is worth trillions of dollars, and even a small share of that market could create massive demand for a digital asset that is designed to move value quickly and efficiently. When people talk about extreme price predictions, they are not always talking about retail investors pushing the price up, but about large scale adoption that changes how money moves across the world. Now, think about this for a second. If XRP becomes a bridge asset for banks, institutions, and financial systems, then the value of XRP would not just depend on trading volume, but on how much money is flowing through it on a daily basis. This is a completely different way of thinking compared to most cryptocurrencies, because instead of asking how many people are buying and selling, you start asking how much value is being transferred using XRP. And that is where the numbers start to become very large very quickly. At the same time, there is another layer to this, which is regulation. And for a long time, XRP has been held back by uncertainty, especially in major markets. But as clarity starts to improve and as legal battles begin to settle, the environment around XRP starts to look more stable. And this is exactly what large institutions have been waiting for. Big money does not move into uncertain environments easily, but once the path becomes clear, the shift can happen faster than most people expect. This is why some analysts are starting to revisit their long term projections, not because they suddenly became optimistic for no reason, but because the foundation is slowly changing. When you combine utility, potential institutional use, and increasing clarity, you start to see a scenario where XRP is not just another digital asset, but something that could play a role in the backbone of financial infrastructure. Of course, this does not mean that XRP is suddenly going to jump to $1,000 overnight. And it does not mean that every prediction you see online is accurate. But it does mean that the conversation is evolving. And when conversations change at this level, markets often follow. And the key here is not to blindly believe extreme numbers, but to understand what would need to happen for those numbers to even be possible. As we move forward, we're going to break down exactly what is driving these bold predictions, what kind of adoption would be required, and whether the idea of XRP reaching such high levels is pure hype or something that deserves serious attention. Because once you understand the mechanics behind these claims, you will start to see why this topic is getting so much attention right now. Now, to really understand why people are even talking about XRP reaching extreme levels like $1,000, you need to look deeper into how value actually flows in the financial system and where XRP could potentially fit into that structure. Because without understanding this part, everything else will sound like pure hype and unrealistic speculation. The truth is that the global financial system is not small, it is massive beyond what most people imagine, with trillions of dollars moving every single day between banks, governments, and financial institutions across different countries. And most of these transactions are still slow, expensive, and outdated in terms of technology. This is exactly where XRP enters the conversation because it was designed to solve a specific problem, which is making cross border payments faster, cheaper, and more efficient. Traditional systems rely heavily on intermediaries, which means money does not move directly from one place to another, but instead goes through multiple steps, creating delays and increasing costs. XRP, on the other hand, acts as a bridge that can transfer value almost instantly. And this is not just theory, this is the core idea behind its use case. Now, here's where things start to scale in a serious way. Because if financial institutions begin to use XRP for liquidity, meaning they hold or use XRP to move funds between currencies, then demand for XRP is no longer just about traders buying and selling, but about real world usage. Imagine a situation where banks need XRP to settle transactions quickly and they are using it continuously throughout the day. Then suddenly the demand becomes constant and utility driven rather than speculative. When people throw around big price targets, they are often thinking about this kind of scenario where XRP becomes deeply integrated into financial systems. And when you start doing the math based on global transaction volumes, the numbers can become extremely large. Even capturing a small percentage of cross border payments could mean billions of dollars flowing through XRP regularly. And that kind of activity could significantly impact its price over time. Another important factor that is often discussed is liquidity, because for XRP to support large scale financial transactions, it would need to have enough value to handle big transfers without causing major price swings. This is one of the arguments some analysts use when they talk about higher price levels, because a higher price means each unit of XRP can carry more value, making it easier to handle large transactions efficiently. In simple terms, if XRP is worth more, fewer coins are needed to move large amounts of money, which can improve its functionality as a bridge asset. At the same time, there is growing attention on partnerships and developments around the ecosystem connected to XRP, especially when it comes to financial institutions exploring blockchain solutions. While not every announcement leads to immediate adoption, the trend itself is important because it shows that the idea of using blockchain in traditional finance is no longer being ignored. As more players enter this space, competition increases, but so does innovation, and XRP remains one of the assets that has been positioned for this type of use from the beginning. There is also the psychological aspect of the market that cannot be ignored, because once a narrative starts gaining attention, it can spread quickly, especially in the crypto space. When people begin to believe that something big could happen, it often leads to increased interest, more buying activity, and stronger price movements. This does not mean that every prediction will come true, but it does mean that narratives themselves can influence market behavior in powerful ways. However, it is very important to stay grounded while looking at these possibilities because not every scenario will play out perfectly, and there are still challenges that XRP needs to overcome, including competition from other technologies, regulatory differences across countries, and the pace at which institutions are willing to adopt new systems. These factors can slow down progress, and they are part of the reason why extreme price predictions remain uncertain. As we continue, the next part will go even deeper into what kind of real world adoption would actually be required for XRP to reach such high levels, and whether the current trajectory shows any signs of moving in that direction. Because understanding the gap between where XRP is today and where some people think it could go is the key to separating realistic expectations from pure speculation. Now, let's take this conversation to the next level, because understanding the theory behind XRP is one thing, but figuring out what actually needs to happen in the real world for something like a $1,000 price is where things become much more serious and much more realistic. When people hear extreme predictions, they often focus only on the number, but the real question is what level of adoption, usage, and global integration would be required to even support that kind of valuation. And once you break that down, you begin to see both the potential and the challenges very clearly. First, you need to think about scale, because for XRP to reach such a high price, it cannot remain a niche asset used by a small group of institutions or traders. It would need to become a core part of financial infrastructure, meaning banks, payment providers, and possibly even central systems would need to rely on it consistently. This is not something that happens overnight, and it is not something that happens with small partnerships, because we are talking about deep integration into how money moves globally, not just occasional usage. For example, if XRP were to be used regularly for cross border settlements between major financial institutions, then the volume of transactions flowing through it would increase dramatically. This would create continuous demand, not just from investors, but from systems that require XRP to function. In that kind of environment, the price is no longer driven mainly by speculation, but by necessity, because institutions would need XRP to operate efficiently. This shift from speculative demand to utility driven demand is one of the biggest factors behind long term price growth in any asset. Another key element is the liquidity distribution across the world, because for XRP to handle global transactions, it must be available in different regions and markets at all times. This means exchanges, financial platforms, and liquidity providers would need to support XRP at a large scale. The more accessible XRP becomes, the easier it is for institutions to use it, and this accessibility plays a huge role in adoption. If liquidity is limited or fragmented, then even a strong use case can struggle to grow. There is also the role of governments and regulatory bodies, which cannot be ignored in this discussion. Financial systems operate under strict rules, and any asset that aims to become part of that system must meet legal and compliance standards. This is why regulatory clarity is so important, because without it, large institutions are unlikely to fully commit. As more regions begin to define their stance on digital assets, the path becomes clearer, and this can open the door for broader adoption. At the same time, competition is increasing rapidly, because XRP is not the only solution being explored for cross border payments. Other blockchain projects, as well as traditional financial systems upgrading their technology, are all part of this race. This means XRP must continue to prove its efficiency, reliability, and cost advantages if it wants to secure a strong position in the market. Being early is important, but staying relevant is even more important in a fast moving space like this. Another factor that often gets overlooked is time, because even if everything moves in the right direction, large scale adoption takes years, not weeks or months. Financial institutions do not change their systems quickly, especially when those systems handle massive amounts of money. Testing, compliance, and gradual implementation all take time, which means that any major shift involving XRP would likely happen step by step rather than all at once. Despite all these challenges, the reason why people continue to talk about extreme price levels is because the upside potential is tied to global systems, not just individual markets. When you connect an asset to something as large as international finance, even a small percentage of adoption can have a significant impact. This is why the conversation remains active because the possibility, even if uncertain, is tied to something very big. As we move into the next part, we are going to explore the gap between current reality and these high expectations, and whether the current signals in the market suggest that XRP is moving closer to that level of adoption, or if the hype is running ahead of actual progress. Because this is where you will start to see the difference between excitement and evidence. Now, this is where everything starts to become very clear, because when you compare the current reality of XRP with the extreme expectations being discussed, you begin to see a gap that cannot be ignored. And understanding this gap is one of the most important things if you want to think clearly instead of getting carried away by hype. The idea of XRP reaching $1,000 is not just about growth, it is about transformation at a global level. And the question is whether the signals we see today actually support that kind of transformation, or if the narrative is moving faster than the real progress. At this moment, XRP is still in a stage where adoption exists but is not yet dominant, meaning it has use cases, it has partnerships, and it has a presence in the financial discussion, but it is not yet the backbone of global payments. There are still traditional systems handling the majority of transactions, and even though they are slower and more expensive, they are deeply integrated and trusted by institutions. Changing that kind of system is not simple, and it does not happen just because a better technology exists, because in finance, trust and stability often matter more than speed alone. This is why the current progress of XRP needs to be viewed in a realistic way, because while there are developments and improvements, the level of adoption required for extreme price levels is still far ahead. Institutions are exploring blockchain, but exploration is not the same as full commitment, and pilot programs are not the same as global implementation. There is a big difference between testing a system and relying on it for daily operations involving billions of dollars. Another important point is market behavior, because even if XRP has strong fundamentals, the price is still influenced by investor sentiment, market cycles, and overall conditions in the crypto space. We have seen in the past how quickly prices can rise and fall based on emotion, news, and speculation. And this volatility makes it difficult to maintain extremely high valuations without strong and consistent utility backing it. For XRP to sustain something like a $1,000 price, it would need not only a surge in demand, but also a stable foundation that supports that valuation over time. There is also the question of supply, because XRP has a large total supply compared to many other digital assets, and this plays a role in how price moves. When supply is high, reaching extremely high price levels requires significantly more capital and demand. This does not make it impossible, but it does make it more challenging, especially when compared to assets with lower supply. This is one of the reasons why some analysts remain cautious when discussing extreme price targets, because they consider not just the potential use case, but also the economic structure of the asset. At the same time, it is important to recognize that markets do not always move based on perfect logic, because narratives, momentum, and sudden shifts in perception can create powerful moves that go beyond what people expect. If a strong narrative around XRP continues to grow, and if it is supported by even moderate real world progress, it could lead to significant price increases even before full adoption is achieved. This is how markets often work. They move ahead of reality, pricing in expectations before they fully materialize. However, this also creates risk, because when expectations become too high without enough evidence, corrections can be just as strong as the initial rise. This is why it is important to stay balanced, to look at both the potential and the limitations, and to avoid making decisions based only on extreme predictions. The goal is not to ignore the possibility, but to understand the conditions required for that possibility to become real. As we move into the final part, everything will come together because we will look at what this means for you as someone watching this market, how to approach these kinds of predictions, and how to think about XRP in a way that is informed, realistic, and focused on long term understanding rather than short term excitement. Now, after looking at all sides of this discussion, the hype, the potential, the real world use case, and the current limitations, everything comes down to one simple but very important idea, which is how you personally choose to look at XRP from this point forward, because at the end of the day, the market will do what it does, prices will move up and down, narratives will change, and predictions will continue to appear. But your approach and your understanding will determine whether you stay ahead or get caught in emotional decisions. The idea of XRP reaching $1,000 is powerful because it captures attention and creates excitement. But the real value of this conversation is not the number itself, it is the deeper understanding of what would need to happen for something like that to even become possible. When you think in that way, you shift from reacting to headlines to actually analyzing the situation. And that is where smarter decisions are made. Instead of asking if a prediction is true or false, you begin asking what conditions would support it, how close the market is to those conditions, and what risks are involved along the way. Right now, XRP sits in a position where it has strong potential but also clear challenges, and this balance is what makes it interesting. On one side, you have a digital asset that is designed for real world utility, connected to global payments, and supported by ongoing development and discussion in financial circles. On the other side, you have slow institutional adoption, regulatory differences across regions, competition from other technologies, and the reality that large systems take time to change. Both sides exist at the same time, and ignoring either one can lead to a distorted view. For anyone watching this space, the smartest approach is to stay informed and patient, because big moves in markets like this do not happen randomly. They build over time. There are phases where nothing seems to happen, where prices move sideways and interest fades, and then suddenly momentum returns and everything starts moving quickly. These cycles are normal, and understanding them helps you avoid panic during slow periods and overconfidence during hype phases. Another important thing to keep in mind is that no single prediction, no matter how confident it sounds, should be treated as guaranteed. The crypto space is full of bold claims, and while some of them are based on real analysis, many are driven by speculation and emotion. This does not mean you should ignore optimistic views, but it does mean you should always balance them with critical thinking. The goal is not to be overly positive or overly negative, but to stay realistic and aware of both opportunities and risks. As XRP continues to evolve, the key signals to watch will be real adoption, consistent usage in financial systems, and continued progress in regulatory clarity. These are the factors that can support long term growth, not just temporary price spikes. If these areas show strong development over time, then higher price levels become more understandable, even if they take years to reach. But if progress remains slow or limited, then extreme predictions may stay as ideas rather than reality. At the same time, it is also important to understand your own position, your goals, and your risk tolerance, because what works for one person may not work for another. Some people are willing to wait for long term outcomes, while others focus on shorter term movements. And neither approach is wrong as long as it is based on clear thinking and not emotional reaction. The mistake many people make is following hype without a plan, and that is where losses often happen. So when you hear statements like XRP going to $1,000, do not just react to the number. Instead, take a step back and think about the bigger picture, because that is where the real insight is. The future of XRP will not be decided by one prediction or one moment. It will be shaped by continuous development, adoption, and market behavior over time. And those who understand this process are usually the ones who navigate it more successfully. Before we end, it is important to say that this content is for informational and educational purposes only and should not be considered financial advice. The crypto market is highly volatile and involves risk, so always do your own research before making any investment decisions. If you found this breakdown helpful and want to stay updated on the latest insights and analysis, make sure to like this video, subscribe to the channel, and stay connected for more content that helps you understand the market in a simple and clear way.